Good morning, everyone, and welcome to Morning Markets. My name's Chris Leyland, and I'm Director of Investment Strategy here at True Potential. And what I want to do today is really just talk through, what are the key things that we're talking through on the investment team at True Potential. So let's start off with the oil price, and Saudi Arabia and members of OPEC Plus actually surprised investors yesterday by not increasing oil production. So Saudi Arabia particularly was surprising, so choosing to continue its voluntary supply reduction of 1 million barrels per day for the month of April. With the global economy continuing on its path of recovery, many analysts actually expected an increase in supply overall. Careful optimism came from the group through on oil price stabilization overall, so that was positive. And actually you saw the oil price react well, so it was up 5%. If we move on to the US and something I talked about yesterday, Jerome Powell. So Jerome Powell's the chair of the US Central Bank, the Federal Reserve, and he spoke yesterday. So he took time to, reassure investors with his comments that the Fed will be patient in the face of a temporary rise in inflation due to last year's pandemic-related fall in prices. And Powell has actually been very careful over the past few months in his messaging overall. So he's been determined to stick with the rhetoric that interest rates will stay at low levels for some time, basically until the dual targets of inflation at 2% and also maximum employment have been reached. But again, they've been reached for some time, which I think is the key wording there. And then looking at Powell's words and the effects on markets, it did help to partially soothe bond markets, but not enough that we saw the 10-year US Treasury yield climb to around about 1.55%. So what you've been seeing over the past few weeks is investors have been selling US Treasuries, taking the view that Biden's tabled $1.9 trillion stimulus package will lead to strong economic growth, but it also could potentially fuel inflation. What we've seen is higher yields are unsettling some equity investors overall, so you have seen a little bit of volatility in equity markets. Our view at True Potential is that we know inflation will rise. It's a base effect, and the reason for that is the cratering of prices that we saw early last year due to the pandemic. But what we believe is that the Fed and other central banks will not engage in any knee-jerk reactions to moves in bond yields, and their messaging will be both credible and clear. If we look out to today, key data point will be the US non-farm payrolls figure. So this will give guidance as to the strength of the labour market, recovery overall, and it will give further colour to the overall recovery in the US as we come through the COVID pandemic. Okay, excellent. Thank you very much for listening today. Hope you enjoyed my commentary. Please listen in next week. Please listen in daily overall, and enjoy your weekend. Thank you very much.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.